Alrighty, so this is going to be a quick little scan of the equity market. My focus is going forward, 2026 outlook, specifically the first quarter or two, right? You want to have a kind of a, understand the timing of things and how, your perspective in Q4 can be different from what you think would happen in Q1 based on what you think would happen in Q3, right? It's all about, analyzing what goes down and what happens, right? But I think that this is a very distributive range. When we just look at SPX in general, I think this is a distribution. But I think when you compare it to last Q3 and 4 into Q1 into the February of expiration, I think it's very, very evident that it's building a similar range out, right? So, um, when we look at this simple little paragraph, right, it's the same kind of window. We look back at the election result in November of 2024. We see a nice pop, some preliminary signs of a distribution establishing themselves beforehand. A potential climax being put in, right? And when we want to think about the climax, we want to think about all the bidding and buying that happened from the uninformed party, right? That is, buying at the highs. And just how that behavior can offer a counterparty fill for the informed party that is, been showing their hand, right? Especially with such a big event like the election, right? A lot of people were very bullish on crypto and tech, on risk on equities because of Trump getting elected, right? And it really gives you this opportunity as the informed party to capitalize on those weak hands, right? So we see a sweep of the election gap. We see another exhaustive rally into the December of expiration and FOMC print on the 18th. And this is our first initial footprint, right? 3% decline, 3 billion volume, and it really, really gave you a good sign of what's to come, in my opinion, right? And this is all within like a holiday range, right? So when we think about the Vantage harm flows and we think about the timing and the expirations, right? There's a reason that we see this stagnant price action occur during such a time because there's a lack of participation from the majority of people, and you're not necessarily going to see a big move one way or another, at least not, very likely that you will, because of that lack of participation, right? And you're going to see the flows overpowering just the volume in general from, regular users, regular traders. And we're going to see a potential dispersion happen, right? Where we have things pull apart. We have equities move different directions in terms of risk on and risk off, and then the indexes kind of stay stagnant. But what we see here and what we're seeing currently is the beta charm flows at the end of the year and the beginning of 2025, right? December is the largest equity or index expiration. January, the largest single stock expiration, right? And those have a lot of relevance, and the end of the year flows and whatnot, releveraging have a lot of relevance. That's why you'll see some individual names really rally into the end of the year. But we see this range building out, and we see it happening in the same kind of time frame as we do currently, where it's just a holiday season, end of the year, beginning of the next year, and we're waiting for those hedges and positions to unwind to really see the movement occur, right? Because we have those flows really pinning us and playing a large part in how the equities and the indexes move. And so we see this first initial sign on VIX expiration, right, which is obviously the volatility expiration. That plays a big part as well. It's, kind of vol is free to move. I guess that makes maybe not 100% correct, but indexes are free to move when we have the VIX expiration, right? The hedges unwind. And then we see this kind of 3 lower low accumulation within the election gap into January expiration week, right? We see a rally to new highs. Again, the price action and the structure is very weak. We see like very exhaustive gaps, small spread candles, and then kind of like climaxes being put in. Just showing that there's a buyer here, but this buying is exhausting as we see a push to new highs. And then the first domino falls, which was the deep seat gap on the 27th of January. We see the OPEX gap filled. We see some, two lows soaked into CPI, I think this was, and then a rally to new highs. And the top for this range was February of expiration, right? We see a very quick and easy decline. We see a gap up to begin the week, and our last point of supply established at a very important range, which was this kind of floor from this two lower accumulation. We see a bleed, a pop, a lower high underneath the initial floor that was absorbed, right? It kind of bleeds through this range. We see like an hourly accumulation within the distribution give you a leg into a higher low, into an INWOG and some exhaustion right after the expiration on the 21st as well. And then we see a very aggressive breakdown into a lower high, into our kind of catalyst event, which was the Liberation Day on the 2nd, after hours on the 2nd, and then bled its way into the 7th, where we see our tape flip. And all of this leads into the summertime, right? The summertime is, again, another similar kind of low participation. There's a ton of holidays in the summertime. And we tend to get the Vanna Charm flows playing a big role in the movement of the equity market. And that's exactly what we saw, right? And the relevance behind what happened in April, right? Historic volume, aggressive kind of um, bearishness from the large perspective of people, like the broader equity market, not the broader equity market, the uninformed party being very bearish on the equity market, 21% from the highs from February 19th to April 7th low. And there's a big change of hands. Someone big stepped in and saved the day, at least most likely. And, we get that news that hits, we get the kind of higher low established, and we get a very easy rally to new highs, right? And what do we start to see as we develop these new highs? Well, we begin to see the potential preliminary supplies kind of establish themselves at the end of July. The lack of like reaccumulative ranges is very notable. And then we have our first footprint on October 10th, another 2.7% session. This is not going to be like the first kind of like, this is our buy climax. I would assume so. This is not going to be like our first, like this is not going to start it all off, right? Because it's going to take a while for this campaign to be established. We're going to want to see the hands change. We're going to want to see the supply or demand wiped from this range in general. But it's our first initial sign and kind of our climax that's established, right? We see this candle absorbed, right? We see the gap the following week. That gap is filled on a very notable kind of red to green candle. And then we rally to new highs where we get our UT, right? And we get, once again, just a very weak pop to new highs, right? With very unstructured price action, aggressive gaps into a subsequent stall. And then we see a lower high within this gap, a very nice breakdown, another subsequent lower high within this gap, and then another notable breakdown to where we then take out this October 10th candle on a very aggressive gap and failure on the NVIDIA report, sweep the lows of this print. There's a lot of money built up around this range. There's a lot of demand and liquidity underneath the candle's low that has such a large importance to the range that we're building out. And then we see another pop, right? We see a very aggressive rally. We see like like 4%, 5-6% rally. And then like an hourly distribution kind of start to develop. We have gaps up here that have been unfilled. And then we find a higher low on the 17th, right, on kind of like a climatic low being put in at higher low territory. Another pop to the new highs. And then what we're kind of seeing here is a potential internal higher low develop on the INWOG from the week of the 22nd. I wouldn't be too. This is not a bad long, right? This is like our internal, like our break of structure, internal higher low within an INWOG on notably like a cumulative intraday perspective from last Friday, right? When you look at these lows being bid, the very strong close, all happening within a new week opening gap. That's not really too concerning. Or it's not really too like bearish at all. You can definitely long it into these gaps up here that we have unfilled from last week, like 69.30 or whatever it is on SPY and QQQ. But it's just these little windows and pockets internally which you can long and take exposure within a longer term distribution. I mean, you can even long this on like a 3 lower low accumulation type of thing, risking that NWOG being lost on like a 5-minute perspective and get like a really clean 0.6% move into day, right? So just that range that's being built out, I think we'll probably get another push to new highs potentially, or this could be our all-time high. January expiration is very important. We'll have to see how we act following that. But I do think that this is going to essentially be very similar to the election gap here, where it's our floor that's being established, right? So in an ideal world, we get a pop to new highs, we get a lower high, failing the previous UT that we put in October, that ended up being, sparking a very aggressive move. We get a breakdown, maybe fill this gap, a lower high, and then we break down. And this is when we would really see kind of that range and path of least resistance potentially be established underneath or off of 65.50. And if this range was wipe drive demand, right, is kind of our floor that we've established. I mean, you can even go back into the September low, and you can 65.50 is a very relevant part within the SPX, and you can just analyze the potential for a test of demand here, right? In an ideal world, LPSY, right, and then we can potentially, if this is range in a level that's kind of wipe drive demand, right, which is just the buyers here very weak, we can maybe get our sign of weakness here, right? And this can push us, all the way down to the sub 6,000 range potentially, although that is a little bit speculative in my opinion, right? So that's kind of my outlook as far as SPX goes. I don't think that this is wrong. I just think it's going to take a lot of timing. I have a lot of focuses in terms of commons trades, some consumer names that look very good, some energy names that look very good. I think that there's longs within here. Like, I don't mind longing this on Thursday. I don't mind it. Reclaiming a gap, very climactic candle being put on the 17th. I don't mind longing that. I don't even mind longing this, but it wouldn't be anything crazy. I would really not want to long. Like, I don't mind longing it, but I would want to wait for a clean short, and then what follows. And I have a lot of other names that look very, very good, long and short, from when the opportunity arises in terms of the movement of the broader equity market, right? Yeah, SPYs is relatively similar, right? We have the ghost wick here within the NWOG from the 22nd. We have the path of least resistance potentially being established. Like I said, you can even go back to these lows put in December or in September. Very similar look. Same here, QQQ, right? The potential preliminary supply. The range being built out back in Q4 of last year. Our climax, our UT, our initial sign, our kind of reaction, our sign of, or our UTAD, and then kind of our sign of weakness right here at the election gap low. And we have our similar range being built out off the October 10th print, right? And I think it's just the same kind of thing. And I think that you can potentially take this long to 632. I don't think that's too far-fetched. Maybe a new high being put in. But I'd be much more focused on kind of individual names, right? And SMH as well, right? Climax, UT, automatic reaction / floor being put in, right? Kind of find our higher lows in here. Potentially find our UTAD, right? This is a very climatic high being established when we look at this SMH chart, and we look at some individual names like AVGO and NVIDIA and TSM and AMD, right? These are all potential preliminary supplies into this big rally that gives you this aggressive 5.76% candle on 18.8 million volume, the highest volume you see since the April lows. We find a higher low, you see the exhaustive pop, you see the climax and exhaustion, you see an aggressive leg into a gap and a failure on the NVIDIA report. Those lows taken out from October 10th, the rally failing the highs, getting you a nice leg, a higher low within this gap being filled, and then the rally to new highs. But this is very climatic, right? This is very climatic. We have, volume and effort, not effort versus result, not necessarily aligning. And it's just very, very notably red flaggy on semiconductors. XLF really gives you no directional read. I do think that this is more than likely a higher time frame distribution, but I don't have an edge here at all. When I look at XLE, right, we see the news today. We see the news, well, technically on Saturday, off the Venezuela shit, right, the oil. When I think about XLE and I think about energy, I don't like this quite yet, right? I would absolutely love this underneath the April 7th lows in this NWOG at the 36 spot. It used to be 72. Of course, they split it. I would love this underneath those lows, right? Because it sets up a cleaner opportunity. We have a big gap being filled here currently, a big time gap being filled, and kind of some signs of a larger seller within here. And if we see such a big reaction off of news, right? And you get a lot of people bowled up, you get a lot of people excited on energy, You're going to trap a lot of those late buyers. You're going to trap a lot of those late weak hands, late participants. And it's just going to offer an opportunity for this seller to show his hand, for these late hands or these late buyers to be trapped, for them to sell, as we break down, and for that buyer to kind of reaccumulate and build a position, and then we see a massive change of hands happen underneath the April lows. That would be an ideal scenario. I don't know if that's going to be the case. OXY is a very good looking chart, but when you see these gaps fail, right, and we see a really accumulative range built out here, but we see such a liquid low, and we see such a nice pop that's giving you all this good news, the Buffett news, and now the Venezuelan news, and it's getting bought up, and we're seeing a lot of trapping occur of those late buyers. It just offers an opportunity for hands to further change underneath these lows when those stops are hit, and it's just creating those counterparty fills. And we see the distributive kind of highs being sold off within like a daily perspective. That's kind of a distribution within a longer time frame accumulation. But I've talked about this chart so much. It's such a good looking longer term buy. When I think about just a commons trade to 55, 60, 70, 80 in the next year or two, that's a phenomenal chart. But it's 20 times better if we take out these lows. And we see, it's been already 280 days. If we see these lows taken out, we see like $34 swept. We can see such a lack of progression from sellers and know that the party in control of this range is a buyer. Well, we already kind of do based on the preliminary signs and where the volume is being put in. But that will just further establish and mature the campaign that's being established, right? Or that's being developed. ZOM. This is a pop to new highs after hours, right? Like we made new all-time highs after hours on ZOM. Now, I just don't like this quite yet. I mean, you can say what you want. I would be positioned in OXY. I do like CVX, looks pretty good in terms of like 3 lower lows, taking out these internal lows that never were touched for 3 years, a nice pop into the gaps and a potential higher low. I mean, that's seen like a 20% to 13% leg off of the higher low we found in mid-December. But my favorite look is OXY. VLO, this was a great trade back in Q3. ConocoPhillips looks decent. Marathon Petroleum Corporation looks decent. Phillips 66 looks all right. Schlumberger SLB looks pretty solid, I will say. But it all, I'm sorry, it all looks so much better if we take out the lows that were established in April, especially on OXY. Maybe not on all of these, but on OXY and XLE themselves, right? Meta, I've talked about Meta a lot. We have this ghost wick. We have this previous floor that was broken down under. We have this gap. We have the 618. I think this is a great commons trade on METU from down here into the gap, and then hold some or re-add as we build out this kind of absorption of supply for a push to 700. However, I do think that this is all within a very notable distribution that's being developed, right? We have a historic move, historic volume down here in 2022, a big time rally, notable potential preliminary supplies, a preliminary supply being put in, right? Nice leg this week. Big rally, climax, reaction, right? It's like a 30% loss in the underlying, right? 35% loss, or 35% decline in the underlying. Big time rally, stall at the new highs, higher low, kind of internally, gap up off the report, give you that kind of counterparty fills, right? Not a very good candle. We take out the highs that are very liquid, sweep the gap, last point of supply within this bear gap that we established for the new week opening gap of the 18th. And then another subsequent lower high off the full earnings gap fill, break down, fill this May 12th gap, put in what's ideally going to be our sign of weakness around 700. And you can just literally, all you can do is trade METU and then trade you can trade METU and then is there a Meta Bear shares? And then you can trade like METD, right? And you can just get like phenomenal opportunities on this commons positioning, right? Because the reason that this gap is unfilled, this earnings gap from the 1st of May, I think that's going to be the target. I do think this goes to 384 on a longer term perspective. That's a pretty big decline from 700. That may take a little bit. Path is an absolutely phenomenal commons trade. Fairly simple chart, right? We have our client, like a lot of names from the 2021 highs, getting cut, 90% from the underlying, right? We have the preliminary signs being put in kind of May. We have those new lows, give you a nice little influx of volume, a really nice leg that occurs off of that. And all this kind of happens after a bear gap in March of 2022, a bear gap that, sparks the initially highest volume of all time. It's kind of where this accumulation began. We had a really nice leg, a failure within this gap, breakdown on even more volume, and kind of exhaustion being put in terms of like the weekly perspective and the candle spreads and the volume, the effort not really matching the result, signaling that there's a larger buyer down here and the sellers are kind of getting pressed. We take out those lows in August of 2024, right, for what it was initially a 0.25% decline in 2 years. A failure within this bear gap. We then take out those lows again in March and August, which held a lot of relevance. 9% in 861 days. And then we find our kind of test, right? This is kind of like our preliminary supply, our climax, test, spring, test / change of character, rally on insanely high volume, last point of support, another one, last point of support. We're seeing a lot of volume and a notable buyer within the earnings gap and within the 618 range. We can target 21, we can target 29, right? We can just keep adding and rolling on lower or higher lows, right? This is a very fast and hot moving high beta name, right? I mean, you can get a 60% return from the low into the high of this kind of structure. So this is a really good name that I want 29 on. Disney's a pretty nice chart, right? I think that the tape is kind of flipping on here. Big decline from the COVID highs. Take out the COVID lows with preliminary signs of accumulation being developed throughout this range. We see notable legs throughout here. We see a potential higher low found in August. Doesn't really look the best, a little bit deep. And then we get a pop. We see that broader equity market decline. We see another subsequent attempt at a higher low, like monthly higher low. I guess you could say that. We see those lows taken out. We see a really clean and effortless move, which is always a very good sign when the move is so simplistic, so easy. There's a notable sign that the buyer here and the aggressiveness behind them and the lack of supply within this range is very, very notable, right? Because we've seen a lot of attempts from the sellers to press this down to new lows, hasn't really seen much of a fall through. And then we finally, in my opinion, are seeing our last point of support on a weekly perspective. I think this is a great commons trade, right? We see an aggressive amount of volume off the report. We see the 618 or the 0.5 and this May 2025 gap be swept. We see a really clean pop into the peg. I think this $100-ish range is a very clean buy for a push to 126, to potentially 130 to 140. That's pretty much it as far as my perspective on Disney. Ford's a very clean commons trade. I've talked about this a ton. It's not a huge watch of mine when I think about like, it could be like 2026 outlook. I think it's just a great commons trade to push 15. I've discussed the potential opportunities to buy this all throughout this range, right? We have a floor established, a clean leg put in, those lows taken out, consolidation occur into the test and the climax or the spring, and then we have our last point of supports occurring in what in my opinion is kind of a higher time frame reaccumulation following a big decline from the 2022 highs, right? And this could push 25. I think the long-term buy on this is a pretty good bet, right? Just based on the volume being put in on a weekly, monthly perspective. I mean, we have the highest volume month of all time in October. Something big happening there. Very notable high volume in the April month, March and April as well. Right, the two highest volume, well, 2 of the 3 highest volume months happening within 6 months apart. It's a very big green flag for longs, and then the lack of progression from sellers, the floor being put in, lows taken out, clean legs occurring. It's a very good watch. I do think this can push, break a structure on a monthly perspective. Play it as such, though, right? I do like the commons trade on this. However, for potential push to 15, and then we can reevaluate for push to 17, right? I still like UNH. I've talked about this. I think you're seeing a distribution that broke down and is now giving you an accumulation. However, not the best look quite yet. Um, not the best look quite yet. You obviously see the aggressive 60+% leg into the gap from May. And we see an attempt at a higher low being put in. I love the $300 spot to be taken out, the August 15th Buffett gap, or even a new low put in, right? But this is a big time watch on a commons perspective, and I would wait to take a shorter term trade on this. Nike, I've talked about this a ton as well, right? And would you look at this, right? I'm not gonna explain this whole entire chart again. We see the big breakdown off the report volume wise, right? 109 million volume traded on this candle. We see the exhaustion and the small spread print being put in the day before Christmas Eve. And then look at that. We see Tim Cook news. We see a bunch of news on this. We see a big rally off this low, right? We're up 15% off the lows following the report. And it's all happening off of this in-log from May 12th, right? And so this is our LPSY, I think, right? This was not a very convincing range until we have this report and until we have this influx of volume on this small spread candle. 120 million volume on a 3% week is very notable in terms of effort and result, right? And the preliminary signs of this name as well, even dating back to earlier 2024. I think this is a great commons trade within the $60 spot. Like I said, I've been waiting for a time to take a position on this. But just look at this volume here, right? Just look at this volume back here, right? Absolutely insane looking chart, and I think this pushes $90 to $100 this year most likely. Bob is pretty simple, right? It's higher time frame accumulation underneath the previous all-time lows. Climax being put in, preliminary support climax. We see like a spring underneath these lows. And we see like a higher low, like a test, an LPSY, and LPSY. But what I'm really looking at, this is a bear gap right here from the November 2021. Maybe it was a report. I'm not sure. We failed that, right? We see that resistance. We see that seller show his hand. We see the weakness behind that seller. We see the volume pouring in at the higher low in April. An internal structure developed. Big pop, reclaiming this previously established resistance for a potential push to 200. I like this one commons. That's pretty much it, though. Now, let's get into some short side focuses here. Like I said, semiconductors are very notable, right? We look at SMH, there's a very notable distribution being put in. When you just look at this range that we're building out, we look at TSM, right? Very, very similar. In my opinion, this is still a name that I do think revisits the $133 spot. A little bit speculative, a little bit skeptical though on that, but it's one of those names that doesn't really look good at all, right? We see kind of a potential preliminary supply and distributive top being attempted earlier this year, but we see those previous highs reclaimed, and we see the rally where there's not really a clean structure being established throughout here, and it all leads into the initial footprint on the 10th, the pop and rally into the report, and the very weak follow through, and the very notable influx of volume, and the attempt at a higher low being met with a lower high, and this accumulation attempting to build out, right? So here's kind of our climax. Like I said, these earnings reports and the preliminary supply beforehand, this generates a lot of counterparty liquidity within this range, right? And we see kind of a 4 lower low, like daily accumulation right here, right? So that's a very strong attempt at a party to bid this up, and a very notable amount of liquidity. Obviously, there's a gap here that follows, but a very notable amount of money built up beneath this candle's low. What is it met with, right? A rally to new highs, a failure at new highs, a very clean and quick move back down to that range, right? For kind of our sixth attempt at finding a higher low off this 280 spot, and a very one-sided kind of like smelt up into a big influx of volume last week, and a notable gap and failure today, right? I think this is a UTAD being put in. I think this will decline to 304. I think this will put in a test. I think this will decline again, put in an LPSY, put in an LPSY, put in a sign of weakness, and potentially get a decline back down to 226, at least down to 249, right? I think that, this is a very similar chart to like SPX. I think this is going to be very playable going forward, and I think that this is very weak in terms of just look at the when I think about this, and think about Wyckoff, right? It's analyzing the behavior and the intent and movement of specific parties, right? There's a buyer down here, but this buyer is seeing a really notable amount of result from a lack of effort, and then we see that influx of volume and very notable exhaustion as we push new highs. So it's really just a buyer being kind of wiped from this range, showing his hand, seeing very little follow through, and a seller capitalizing off that push to new highs and the counterparty fills that comes with that, right? AVGO, a very similar look as well, right? A climax off the report, a sweep at the gap, a UT being put in, kind of a failed breakout, a UTAD. You can kind of label this a little bit differently, like a UTAD and maybe an LPSY, although it is to new highs. I don't really care too much about the schematics. I care more about the behavior and the structure. And we see the decline off the report. We see a potential LPSY being put in. My main focus, if I were to short this, would be, on the fourth attempt at a higher low of 324, I would look for a path of least resistance to be established, right? That's pretty much my only focus on this name for push to 306. Tesla's very similar. A euphoric move to new highs being preceded by kind of exhaustion and a climax being put in, another stall above those highs, a very clean leg occurring, and then we have like an hourly distribution within this range. Just very easy to spot as well. If you just look at this candle, right? This candle, right? Very big pop to new highs, very aggressive kind of wick, seller showing his hand, and then hourly lower highs being put in to fill this gap, to fill this inlog. And we can potentially see an LPSY being put in within this gap, in this inlog. If you want to look at that, it's actually not a bad deal, right? If you want to look at like a test, a breakdown, this could break down all the way to 448 or 414 in LPSY, and then this could go down to 358. Honestly, pretty simple distribution here though. Like not much to say about this. I mean, that's my 2026 outlook, right? Shopify could potentially be a short. Intel is like alright, but I don't like how this range is developing. I said I like energy, but I don't love it quite yet. But the risk to reward is so asymmetric that it's hard not to even have a position on it. I like CRM, but not enough. Like CRM and Adobe, I don't like them enough to be positioned or focused on them. Wait for that change of character. PAW short will be one for the books whenever it develops. Snap, there's something going on down here, but I don't like the risk to reward quite yet unless you're taking a long-term position. MSTR, very similar footprint here to UNH. After a really easy meltdown, I do think that something's going to come something's going to be offered on this name. Look at this candle, look at the behavior underneath that candle, and the kind of wickage and exhaustion from the sellers and the kind of big fall through you could potentially get. I think this is going to be a great long on a shorter term position to 231, right? You get like a 20, we can get a really like an MSTX position. Could be a really easy little pop right on this. MSTR is a good long focus coming soon. Personally, and I like Lulu. This is a longer term accumulation, but I don't like it quite yet, right? I mean, that's pretty much it. Right, that's pretty much it. I think that there's a big time short coming. in the broader equity market. Tech equity, like Palantir and Hood, still really gross when you think about these ranges being built out. There's better shorts for the time being, though. So, I mean, yeah, pretty much it. This is, like, if I had to pick one picture to, like, label as my outlook, it's this, for sure. So good luck, have fun.